newsmaker today as well. That is Asian Paints. We spoke to the management on the quarter gone by, reported a weak set of numbers. So a lot of details that were discussed with Amit Syngle, the MD and CEO. Stock currently at the low point of trade after seeing an 8% decline yesterday as well. So let's hear out what he had to say about the competitive scenario, the demand environment, and more importantly, any revival if there is.
Overall, what we saw that the demand anticipation which we had was not to our levels at all. The consumer sentiments were quite muted. July started off well, but we had some really undistributed rainfall and flood conditions in August, which kind of reflected the demands. And also the pickup which we could have seen for a shorter Diwali in September is something which we never got. And given the fact that the competitor intensity has also been very, very strong, I think we got impacted very strongly in our seasonal markets. One thing which is very clear is that when you see that as a leader, when the overall sentiment is low, the demand conditions are low, you get more impacted in terms of the market overall to that extent. And that is what we saw as a phenomena.
How much of this quarter's performance would you attribute to consumer sentiment weakness, and how much would you attribute it to competitive intensity?
So overall, if you see that, I would say the whole decorative paint industry, if you look at from a point of performance, would be closer to about, in a band of -3 to -4% in terms of what we see. And if you see overall, we are at about 5.5% closer to that mark. And I would say that if you look at from a demand point of view and in terms of some computer intensity, that would be the kind of difference in terms of what we would be seeing. And it in terms of possibly the volumes as well as far as deco is concerned. And in projects, possibly a notch lower in terms of what possibly the competition would have done.
Is it competition from all quarters, or is it just the newer players? If you could, define the intensity of competition.
I would say the larger competition is the existing organized players in terms of what we are seeing, given the fact that demand conditions are challenging. Everyone is putting a lot of aggression in terms of seeing where the market is. And we would say that while the new competition is there, we are not seeing them making so much of an impact in terms of what is there, given the numbers, what we think they are getting. But I feel that the larger impact is coming from the existing larger players in the organized market.
Where does the equilibrium for the industry lie from here on itself? Because you in the conference call as well did say that you expect the competitive intensity to remain high. How should one look at it?
See, I feel that till the time the demand conditions get stabilized and we see some good consumer sentiments coming back in the market, I think the intensity from competition will remain, because that is but natural. As I see it in this situation, the existing competition will continue to be aggressive. The newer competition will find it very, very difficult in terms of really getting some good share in the market to that extent. But they can really leverage overall the India business in terms of spreading themselves across the country.
You did indicate that this year your volumes would grow in high single digits versus the earlier guidance of double digits itself. And you don't expect a big turnaround. How did the third quarter pan out so far for you?
So the first half of the year is at about 3.5% volume growth for us in terms of what we see. Quarter three, if you see, October was a shorter Diwali. We had lesser number of days of retailing to that extent. And we also have a fairly high base in quarter three overall as we see. We are a little bit cautious in terms of the overall demand conditions, because we are seeing urban centers a little bit much weaker as compared to even to the rural centers, which have definitely kind of come up to that extent, and urban centers have a strong contribution in terms of the overall demand and the numbers which they kind of give. We also see the project segment not very strong in terms of the way it has been in the first half of the year. But overall scenarios kind of indicate that there is not a surge in the market in terms of the demand which you are able to see, and the market is a lot of push-led rather than a pull-led to that extent, and therefore we are being a little bit cautious in terms of how would this quarter three pan out. But we think that possibly over a period of time in quarter four, we would kind of see good results coming from overall the good monsoons, everything which we have seen. So some definitely pickup is expected over quarter four as we kind of see it.
You've used the word sales expense increased and increased rebates to dealers a few times in your commentary. You've also spoken about, increased employee expenses as you put more feet on the ground. Is that, again, to protect your turf as the leader?
we have definitely kind of looked at increased, people in the front line who can cater to the large distribution network in terms of what we have, and that is a step which we have taken. If we look at quarter two, the overall absolute spends would have been similar to quarter one. It's just that the top line did not deliver, and that is why the percentage has come higher in terms of what we see. The second area is in terms of we have upped our discounting and rebating in the market to kind of really take care of the increased competitive intensity which have come. We felt it was pertinent in terms of looking at intensifying our activity at the dealer, and that is why it has caused some higher runs with respect to the sales expenses in terms of what we have seen in quarter two.
In light of that, how should one look at your margins? 18 to 20% is what you've expected to get back to in the second half of this year. Should one structurally look at margins closer to 18% than 20%?
Given the fact that we took a price increase in quarter two and we would realize the full impact of the price increase in quarter three, we would definitely see some good impact in terms of the overall margins. We are also looking at the product mix and looking at other sourcing and formulation efficiencies in terms of what we can do in terms of going ahead. But I think overall, we would kind of really see that we want to be in the band. It could be possibly on the lower side of the band in terms of what we could land up in at the end of the year.
Post the value write-down that we saw in White Teak, have you become a little more conscious about the valuations that you will be paying for any acquisitions that you'll do in the very near term?
See, if we look at our acquisitions, the first 2 years were as per plan in terms of the top line, in terms of what we see. This year, given the demand conditions, it has had an impact on those two businesses itself. We had a very high trajectory of growth in terms of what we had taken for both the businesses. What we have got is double digit for the first half, but double digit is not enough in terms of the aggressive value which we had taken as a part of the growth of both the brands. But yes, it's a point to kind of ponder in terms of looking at that. When we look at possibly anticipating very high growths in terms of what we take, we should kind of really look at how possibly demand scenarios can pan out in terms of looking at that impact.
All right, and final question before we let you go. The stock is down about 27-28% from its 52-week high. Asian Paints is negative in terms of returns for FY25 so far after the decline that we saw yesterday. That makes it the third year in the last 20 for it to actually report negative shareholder returns. And if you look at just the absolute price, it's the same level as it was in 2021. So with such depressed valuations, do you think there is a sweetener coming in for shareholders from a company standpoint to stand behind them? I mean, can we expect something like a buyback, etc.? Do you as a company see value in it?
So I think it is too early to take a call in terms of that. We are, as I said, there is a slew of initiatives in terms of what we have put in the market. So we are looking at a lot of newer products, a lot of new variants which are coming into the market. We are looking at some new strategies in terms of totally revamping and giving a new packaging to the customer. We are looking at upgrading quality and looking at really leveraging the corporate brand far more strongly. We've got our Har Ghar Kuch Kehta Hai back, and we see that possibly, I think a good way to kind of really do is to show numbers as we go ahead. And therefore, I think the core job at this moment we are saying is that how we can bolster the brand, get back, what we have kind of lost in the market to that extent, and strongly kind of leverage our sales in the next 2 quarters to see in terms of what good returns we can go give it to the shareholders and get back possibly some of the expectations which our shareholders have.
But you can also accelerate that by doing a bit of a buyback or sending a signal to shareholders who have been waiting for numbers. Before the numbers come by, you as a company would stand to benefit more if you believe the numbers are coming by and you just go ahead and do a buyback, right?
Definitely, I think that's one of the options, but we are keeping all the things open right now. As I said, the first line of thought is to kind of really look back in terms of really accelerating our performance in the market, and that would be paramount.
Too early to think of it, but a buyback is definitely an option. Plenty of takeaways from that interview there from the management of Asian Paints. Time for a short break. Up next, Samvit Gupta, the Joint Managing Director of Gateway Distriparks, joins us to discuss the quarter gone by and the road ahead. Stay tuned.